Mr. Thompson's recognized.
Thank you, Mr. Chairman. Thank you for holding this hearing. I think it's been incredibly instructive and helpful for all of us in dealing with this issue. And thank you all for being here to provide the testimony. I have a couple of things I'm not clear on that I'd like to just have you help me out on. Am I to understand that you agree that whatever we do in regard to corporate tax reform should be revenue neutral? We should not increase the debt. We should not increase the deficit? And we could do the yes or no thing. That seems to be popular.
I think that is the reality of today. Fiscally responsible tax.
So you're for that? Okay.
Yeah, fiscally responsible.
Yes, sir. We would support that.
No. Not fiscally responsible. Revenue neutral, doesn't increase the debt, doesn't increase the deficit. Okay.
That should be the goal.
Agreed.
Everybody's there. And then on that, I think Mr. Becerra started down this road, but on the issue of value-added tax, let me be very, very clear. Many of us are either questionable of that. Many of us are opposed to that. But just for the purpose of understanding the head nods when Mr. Becerra brought it up, are you saying that you would be in favor of a value-added tax in order to make up that difference that would come about because of the lowering of the corporate tax?
I would just say that I think that a value-added tax is probably the most efficient way to raise revenue because it taxes consumption and not investment. And any review of taxes on a holistic basis should include a review of the potential for a value-added tax.
I would agree. I think to the degree that you can make this a comprehensive review of taxes, I think it makes it more valid. I think we've got to be realistic about how much you can bite off at one time.
To the extent we are advocating in favor of simplicity, Congressman, I think introducing a new tax regime would add a lot of complexity and would prefer reform that really is focused on the income tax regime.
And we would agree that the essence of simplicity and really thinking through the administration that would be layered on through a VAT, which we see for example, in many countries in Europe, something just to be seriously considered.
And I just want to point out for the record and anybody who might be listening that the idea of broadening the base and lowering the rate is great, and bottom line, it's a math problem. But you can't get to where you all said we ought to be by just eliminating the expenditure. So something else would have to be added in if we were in fact going to stay at revenue neutral. And everything on the table is different than saying that everything is on the table is different than stating specific ways for us to get there. A couple of other things on Mr. Doggett's question on repatriation. I'm not certain that I understood your position. Y'all think it's a bad idea, or you think the way that it was done last time shouldn't be duplicated?
I think a one-time repatriation is a bad idea. I think, again, it derails the idea of a comprehensive tax reform. So I would advocate against a one-time repatriation.
Okay. I would agree. We're encouraged by the type of debate that's happening here today, and we just don't want to give any relief valve to getting on with this.
Done in isolation, I don't believe it accomplishes the objective of leveling the playing field.
Treats the symptom and not the underlying issue.
Okay. And then if you'll indulge me for just a second, there's a hidden tax, and it was the Secretary of the Treasury pointed this out the other day, and that's in our failing infrastructure in this country. He's stated specifically that that equates to a tax on business. And I'm just curious if you, A, agree with that, and B, when you're looking at your investments in other countries, do you take into consideration their infrastructure and their plans for increasing efficiencies in infrastructure in your overall long-term business plans?
Absolutely. You know, as I mentioned earlier, we exported about $13 billion worth of product last year, and it's hard to do. I mean, with the state of our, the U.S. infrastructure, the feeders into the ports, we definitely have seen a decline in infrastructure competitiveness in the U.S. versus other parts of the world. And as we invest around the world, infrastructure is one of the first things we look at.
So you all agree with that?
That's correct.
Yes, sir.
And then just lastly, we're talking about this debt limit issue and how we're going to deal with that, and the experts tell us that if we don't do it, it'll increase the interest rates. Would that, not increasing the debt limit, would that hurt or help you guys?
I'm afraid time's
would hurt.
expired.
Or just-
Mr. Bustani's recognized.